Fidelity Bank's earnings for the first half of 2017 rather, impressed many analysts after the bank grew its profit before taxes by 66.7%. Nnamdi Okonkwo, the bank's CEO and managing director, joins me now to give the facts behind the figures. Thank you so much for joining us on the show. It's a pleasure to have you on this wonderful Tuesday where we have the news that we're actually out of recession. I'm going to start off with the good news. Yours is also good news as well, but what do you make of the figures released so far?
Thank you for having me, Oni. It's a pleasure to be here. Starting with Fidelity figures?
Yeah.
Okay.
No, the recession.
Okay,
the GDP
recession,
right now, we're out of recession. So let's start with the very cherry news here.
Well, 0.55% growth, that's positive.
Yeah.
That's good news. Congratulations to Nigerians and indeed South Africa as well, right?
Yeah.
Okay, but it's important not to celebrate too soon.
Okay.
It's still a long journey. Remember, our GDP growth at some point, like 2014, was about 7%. So I think it's time to do some introspection, go back to the drawing board and ask questions. What brought us to where we are? So that we don't lose facts of the key issues and begin to celebrate so soon. There's still a lot of work to do. But it's good news all the same.
Interesting perspective there. But let's move on, of course, to your figures now. Now, what were the key drivers of H1 earnings?
For Fidelity, well, first of all, we're very happy with the numbers that were reported. And as you may know, that's an audited financial statement. So it's the first time we commenced interim audit as a decision we took at the board to strengthen governance. So going forward, we'll continue to do that. But the key drivers, what you're seeing actually is an outcome of a medium-term strategy that we set about 3.5 years ago. So it's beginning to yield desired results. The key drivers are, one, FX income. This was driven by positive margins on our FX forward transactions. Secondly, we had, you know, Fidelity is very strong in SME support. I mean, that is clear. So trade finance income came in very strong as well. Why? You know, with the improving FX liquidity, the SME, for the SMEs, we saw a lot of growth in absolute FX trade finance. So that helped us. Finally, balance sheet optimization led to improved yields. So those are the three key points. In terms of top-line figures, I guess as we progress, we'll talk about things like cost and so on.
Interesting. Well, just before we actually move on those figures, you were mentioning the outcome. What we see today is actually an outcome of the medium strategy set 3 years ago. If we just shed light on what this strategy entailed, and then you mentioned, of course, your support for SMEs. Just to give us a hint on, your digital strategy and how this is backing up, your support for the SMEs.
So 3.5 years ago, actually, when I became CEO, the board saw the need to go back to the drawing board and look at those things that would drive where we're going. So our strategy is simple. We were a merchant bank at the beginning, and later on became a full-scale commercial bank. But then we also realized that being strong in the SME sector, indeed, my predecessor had done a good job of SME banking. Starting at that point, we now asked ourselves questions. Demographics are changing. How do we strengthen retail? What do we do for SMEs? How do we ensure we don't lose focus on our corporate banking heritage? All of that dovetailed into our strategy, which is to maintain what we're traditionally known for, but then fast-track our retail banking strategy play, as well as SME play. And that's what you're seeing now. If you talk about digitalization plan for retail, it's really on course. Today, we have about 25% of our customers on alternative channels, and that's some serious growth from where we started about 3.5 years ago. So 30% of these are on, online, and then 70% are on mobile. If you look at our fee income, electronic banking fees contribute about 25% of that. We were not there before. So all of that simply means as demographics change, as digitization takes front seat, you're going to see a lot more of unfunded income coming in to our numbers.
Well, let's go back again to those numbers. Now, your bank recorded a 10% rise in net interest income. Just talk us through what played out in this reporting period.
Okay, for net interest income, we witnessed, improved margins to 15.5%. So what that now resulted into was that our NIM came in at 7.4%, up from 6.9% by end of last financial year. So that was really what happened.
I'm talking about that. You actually saw a 5% decline in customer deposits. What is the plan to actually improve this going forward?
Okay, customer deposits, I'll take that on two fronts.
Okay.
One, as you know in the economy, the high yield on government securities simply led to a lot of depositors moving their monies to government securities. So banks took a hit on that. But not to worry, in terms of funding, if you also check our deposits, today low-cost deposits account for 75% of our deposit base. So that means basically we also did a lot of substitution. So as you are losing the expensive funds, our low-cost deposits also improved, leading to a 75% composition as low-cost deposit. That means you're increasingly becoming a low-cost producer. Having said that, we're not relenting. We'll continue to use advantages we've seen in digitization in retail to drive low-cost deposit growth. Between 3.5 years ago when I talked about and now, we did not only double savings, low-cost deposit kept inching up while the expensive ones decreased. So, and we think that that makes a lot of sense. Again, we didn't want to take very expensive deposits, report a big balance sheet, and then your earnings are suffering. Efficiency was also uppermost in our mind.
All right then. Now let's talk about your cost-to-income ratio. Like, how is that shaping up?
You see, I just talked about efficiency.
Yeah.
Now, cost-income ratio, the common sense thing is, if you want to make profit, it's either you increase revenue or you reduce your cost. This is one item that kept us awake.
So what method did you follow?
So what we did was we witnessed absolute growth in revenues. We witnessed drop in our operating expenses, and I'll tell you how that happened. We indeed, in the last 6 months, we've witnessed, year on year, we've witnessed a drop in 50% of our expense lines. So absolute figure, about half a billion drop in expenses. What happened? We realized that we needed to do process improvements. We engaged one of the top consulting firms to do a 6-month program for us. Yeah. And after that, a lot of the things that you thought were functions actually were just processes. So we realigned all of that, and then we began to see improvement. We set up a cost optimization project where we did away with quite a number of practices we had in the past, specifically in terms of IT costs. We needed to either use proprietary technology in some cases. We had situations, little things that matter. Little things like partnering with Uber to do, our back offices. Most back office functions had their own cars at a point. And we partnered with Uber to say, you know what, if you are, say, in legal department and you have to go to court, why should I buy a car and keep it there for you all the time? Yeah. So you could just call an Uber and go to court and come back. Just an example. But what we found out was it was really, really, really impactful. And so those are some of the things we did. And so we achieved absolute drop in operating expenses and absolute increase in revenues.
Just talk us through your outlook for the rest of the year.
You see, the Super Eagles beat somebody 5-0. And I didn't expect the coach to change the team. He didn't. So just to say, if what we did in the last 6 months worked very well the way it did, I don't think we'll change. Instead, we'll fine-tune our strategies that I spoke about earlier. And we're hoping that our end-of-year numbers will come in in line with expectations.
Talking about those numbers, I did read a story today talking about the fact that Nigeria's banking sector credit to the private sector actually increased 22.17 trillion at the end of 2017. What is the plans for Fidelity Bank? What sectors are you going to be looking out to actually give the support to for the rest of the year?
Yes, we'll continue to give support. If supporting SMEs and retail sector gave us the kind of numbers we're seeing, then we'll do it again. However, the retail portfolio across the industry at some point was challenged, especially in the area of consumer loans when people were owed salaries and all of that. But we've since seen some improvements. It had NPL implications, but with the improvements we're seeing now, we expect that there should be some improvement.
Well, thank you so much for your time. I've been talking to Nnamdi Okonkwo, CEO and Managing Director, Fidelity Bank.